continue the discussion now on the US-UK economic relationship. I'm delighted to introduce our next session. Undersecretary Brent McIntosh is responsible for international affairs at the US Treasury, and I'm delighted he's agreed to join us today, where he'll be talking with Ken Bentsen, the president and CEO of SIFMA, the Industry Trade Association, who is also the co-chair of the British American Finance Alliance, along with Catherine McGuinness, who you met earlier. Gentlemen, thank you very much for joining us today, and I look forward to hearing this discussion.
Thank you, Duncan, and good to be with you, if at least virtually. And thank you, Brent, for joining us today. Brent McIntosh, as Duncan said, is the Undersecretary for International Affairs at the Department of Treasury, the senior international affairs person for the U.S. Department of the Treasury. Brent brings a varied background in both law and government. He served in the prior Bush administration as an associate White House counsel, as well as in the Office of Legal Policy, in the Justice Department. Early in his career, he clerked for both a federal district court judge and a federal appellate court judge. And before joining the Treasury Department, he was a partner at Sullivan and Cromwell. So very distinguished career and background. And again, Brent, great to be with you today. Thank you for joining us.
I'm delighted to be here, Ken. Thanks for having me. Thanks, Duncan, as well. It's a terrific opportunity to talk about US-UK relations. And I should say as well, Ken, thanks for all your work at SIFMA over the years. I've been long involved with SIFMA, participated in various SIFMA events, and even represented SIFMA in the Supreme Court, filing an amicus brief once. So delighted to be with you today.
Thank you. Appreciate all of that as well. So it's a great relationship with our friends at Sullivan from your prior life and all. I think maybe the best place to start, since this is the British American Business Conference, is, I think on everybody's mind is, once Brexit is done, which will be done at the end of this year, one way or the other, is what's going on with the US-UK trade agreement. There's been a discussion around that. Where do you see that at this point in time?
Yeah, so thanks for that, Ken. The US-UK trade agreement is a real focus for the US executive branch at this point because of a number of different factors. From my perspective, looking at the financial services sector, you're talking about two of the world's largest financial centers, and each being the largest provider of financial services into the other. So it's essential that we come to a high standard FTA, and especially from my perspective on the financial services space, we need a high standard financial services chapter, both because it'll promote the financial services trade between our two countries, and also because when you have the two largest financial centers in the world putting together a high standard FTA in financial services, it'll be a model for future trade agreements that should ease trade in financial services around the world. So in terms of US priorities for the chapter, we're looking at things like commitments to non-discriminatory treatment and market access, no surprise there. Obligations to provide regulatory transparency and predictability, which is obviously something that the UK expects from us now, and we expect from the UK now. But putting it on paper between the two of us will be a model for future trade arrangements. And then a topic I hope we can talk about later, which is restrictions on cross-border data flows, making sure that we're not restricting cross-border data flows in ways that can be harmful to financial services. We have, I should say, given the audience here, had really great industry input on what the needs for an FTA are. And so we are hopeful, both hopeful and eager on moving forward as quickly as we can on establishing a high standard FTA and a high standard financial services chapter for that FTA.
Yeah, you kind of answered the follow-up question I had there of you feel like the groundwork has been laid to, once the British finish the business they have to deal with Brexit, that the U.S. and the British can then move rapidly forward on finalizing negotiations and executing an agreement.
Yeah, I do feel that way. Obviously, the British, because of the posture they've had with regard to trade agreements over the period during which they're in the EU, have had to stand up a trade operation. But when it comes to the financial services space, we know who our counterparts are. We interact with them daily. I often think I see my my British counterparts more frequently than some of my interagency counterparts in the U.S. government. And we have a great working relationship, and we understand what we need to do to get from A to B. And so I'm very optimistic about the prospect of a near-term agreement that is really a model for future financial services chapters.
Yeah, that's an interesting point. I note I actually was having breakfast in London on the day of the Brexit vote, and a discussion with an official there about that were Brexit to occur, that they really didn't have a trade department or anything like that. But as one would expect, they set one up rather quickly, and so it's pretty impressive in that regard. Maybe sort of shifting gears a little bit, but not completely, because you mentioned financial services. Whether either within or adjacent to any sort of trade agreement, and the point you make out. I mean, the relationship between the U.S. and the U.K., particularly with respect to financial services, is probably the greatest in the world, right, in terms of flows back and forth. You recently held a virtual meeting of the Financial Regulatory Working Group. How did that meeting go, and sort of what would you say were the outtakes you could share with us?
Yeah, we did just conclude one of those semi-annual meetings, and I should probably put that in context, because we do a number of different ways to promote financial regulatory collaboration between the United States and other countries, not just with the UK. Our goals in doing those dialogues, those forums, is to ensure financial sector resilience and stability, to ensure a level playing field between countries, and to limit unintended consequences of regulation in one country on the other country, including in many instances market fragmentation. And so we do these interactions in a number of different ways. We do them country to country, day-to-day bilateral engagements. We do regular bilateral dialogues, of which the one you referenced is an example. And then we also routinely talk about these issues in the Financial Stability Board and other international bodies. And we've had very key engagements in this space with the UK, with the EU, with India, with Japan. It's worth actually spending a second on the EU dialogues, because until recently, the UK was part of those dialogues. And we've been holding a regulatory forum with the EU since about 2002, with the UK as a part until recently. And those have been highly successful dialogues in reducing frictions between countries. You could reel off a series of successes in those discussions, including making sure that no CFTC supervised central counterparty meets the criteria for EU direct supervision. There were work we did to accommodate foreign firms with regard to the Volcker rule. So there have been a number of successes in that space. In 2018, we took that model and we established a financial working group with the UK in light of Brexit. And then the same year, we stood up a US-UK financial innovation partnership to ensure that both countries work together to stay at the cutting edge of financial innovation. Our goal in holding these working groups is to ensure that we're communicating with stakeholders early on what we're going to talk about and what industry thinks we need to talk about, because we recognize that prudential regulation in one country can have knock-on consequences, unintended knock-on consequences, including market fragmentation in other countries. And so we need industry insight to understand what those consequences we need to mitigate are. So that's all to put in context what we're doing with the UK. The recently concluded regulatory working group we had with the UK was highly productive. It's a semi-annual meeting. For us, it's an important transition point because in the next time we hold this semi-annual meeting, the UK will be fully in charge of its own financial regulatory policy. We held it virtually. It'd be good to get back to in-person meetings. You know, it's done. This whole conversation is done in the context of Chancellor Sunak's recent statement to Parliament that this is going to be a new chapter in UK financial services with an emphasis on continued openness, predictability, transparency, and support for innovation. When we look at the working group itself and its successes, we think there have been, one of the real benefits has been the bridging over of about 24 US-EU regulatory arrangements so that the UK can benefit from those arrangements post-Brexit. As well as the establishment of this financial innovation partnership. We think it's, the conversations we have there are very meaningful. I should say it's Treasury chairs from our side, and we have a variety of regulatory agencies, including I just saw my friend Suyash Paliwal, who participates in those conversations. We have a lot of the capital markets and financial regulators there, and the same is true on the UK side. So we get everybody in the room or on the Zoom or on the WebEx, and we have really robust days-long conversations trying to work through these issues. And you know, no relationship is ever perfectly smooth, but we work through the difficulties with a commitment to good faith resolution.
Yeah, one side note I'll mention on Zoom calls, I was had dialogue with a number of senior European and UK officials last week, just in sort of making the rounds that I would normally do by flying over. And I commented I wasn't bleary-eyed and jet lagged and going into a meeting when you're doing a Zoom call. You're kind of, you know, you're a little more alert. But you're right, it's not the same as being in the room. I do want to, I don't know if this is an observation or a question, but you pointed out the US EU regulatory working group that's been around. And if you think about where we are today versus 2009, 2010, and then kind of going through the development of the rule book from the G20 principles up to the point of where you've been now, you know, and you talk about 18, 19, 20, there was a sense at one point that perhaps the working groups were good collaborative efforts, but there wasn't a lot of substance necessarily. It's just more dialogue. But it sounds to me like it's much more substantive now, perhaps, that all of the major jurisdictions have put their rule books in place or made the G20 adjustments to their rule books. Is that your sense, that you feel like it's more than a dialogue, it's got true material substance coming out of it?
Yeah, I would say that's right. I would say if you look across the set of regulatory dialogues we have, and I named 4, but we have a variety of others as well, they vary in terms of to what extent we're just trying to understand one another and to what extent we're actually able to solve problems in those meetings. And I would say the ones with the UK and the EU are really the gold standard in terms of ability to identify real problems or difficulties and work through them for substantive solutions and be able to come out of those dialogues with real progress to be shown and not just understanding. That's a product, I think, of shared values, but it's also a product of long and hard work on both sides to ensure that we understand each other and we have a commitment to solving the potential consequences that each country's regulation creates in the other.
Yeah, that's great. I want to turn to now to, you mentioned this before, cross-border data flows. Before I do, I just want to remind the audience that we are going to take questions. So if you haven't put a question in, please do, and we'll try and get to as many as we can as time allows. But obviously, you've been directly involved in the data flows, cross-border data flows, and actually, I want to commend you and the administration for the work you've done there. We've kind of come a long way from the U.S. perspective with respect to data localization, where with well-intentioned concerns among policymakers and regulators of wanting to make sure they had access to data, but not necessarily recognizing kind of where we were from a technological standpoint. So I appreciate that. But we are seeing other jurisdictions around the globe, look at imposing data localization requirements. Sort of what's your take of it? Going from USMCA now to we talk about Singapore and your comments over there.
Yeah, so I think it's worth putting the cross-border data flows in the context of U.S. financial innovation for a second, stepping back. When you look at the U.S., we are a leader in fintech innovation. We're a leader in technological innovation more broadly. That's thanks in part to an open and transparent and healthy regulatory system and regulatory framework. If you look at the US in the past 4 years, half of global venture capital fundraising has been in the United States. Fintech investment alone in 2019 was close to $60 billion across a wide diversity of investment types. And the pandemic has only highlighted the importance of those fintech innovations. Whether it's online banking or contactless payments or the vast swath of different innovations that you see happening in our fintech sector, it's only become all the more important during the pandemic. And so you see jurisdictions competing for that innovation. Suyash in the last session mentioned innovation hubs. You see regulatory sandboxes, innovative public-private partnerships. That's all, we welcome all of that across jurisdictions because this is not a zero-sum game when it comes to this financial innovation. It's a positive-sum game. That said, part of what enables those innovations is cross-border data flows. It enables innovative companies to have the flows necessary to ensure, first of all, to ensure that their business models work, but more broadly, you can manage risks across enterprises in a meaningful way because of cross-border data flows in ways that you cannot with strict data localization requirements. It has benefits for cybersecurity and operational resilience. It has efficiencies for business models, and it actually enables regulatory compliance in a way that data localization can harm. If you look at, for example, anti-money laundering rules, which is something that is close to our heart here at the Treasury Department, an enterprise-wide anti-money laundering effort is a much more successful one that's balkanized by country. So it's a very important topic for us, and as you say, one we've been working on closely because we are concerned that some jurisdictions, especially in Asia, have been impeding cross-border data flows under the rubric of giving their regulators access to the data. And we think it's unnecessary to have strict data localization to get regulators access to the data they need. And often what's happening with data localization requirements is that they're actually a stalking horse for commercial advantage that's gained by data localization. So we're pushing back on data localization in a number of different areas. We push back in our trade agreements. You referenced USMCA and the US-Japan digital agreements, both of which have commitments in this space. We push back on a bilateral basis, both by praising our friends who are doing like-minded free flow of data commitments, and by when we see data localization requirements, working bilaterally with countries that are inclined to impose them to push back on those. And then we have a G7 technical experts group as well that is focused on answering the question of what is the reason you want to impede these flows, and how can we solve the problems that you're trying to address without impeding the flows? How can we get to a place where the regulators are comfortable that they'll have access to the data they need without strict data localization rules? And so in addition to the commitments in the trade agreements, we've had a statement of commitment that we released earlier this year with Singapore, which I think you referenced. We've also in various bilateral dialogues, and we've pushed back on data localization requirements. We had a very candid and frank conversation in India late last year about their data localization requirements with both the Ministry of Finance there and the RBI. And then we're working at it on a multilateral basis as well. If you look at, for example, the Financial Stability Board intends to be doing a review of the consequences of data flows for financial stability over the coming work period.
Yeah, it's interesting. First of all, that's outstanding, and it's also interesting because you point out with the development of fintech, in particular, you're seeing a lot of development in Asia in the fintech space. So in a way, kind of counterintuitive, but it's important to be engaging on that. let me go to some of the questions. Thank you for putting those in. And there's a Q&A box at the bottom. If you click on that, you can put a question in. Let me go to the first. How can open banking frameworks in the US and UK converge? The US one is mainly market-led. The UK is been mandated by CMA OBIE.
It's a great question, and one in which I think there's work to be done bilaterally to ensure that we can come to an arrangement that works for all of us. And I think that there's a lot of technical expert work to be done in that space before we end up with the real convergence. But I do think it's one on which we and our friends across the ocean are committed to working through.
Great. Another is would love to hear more about the Financial Innovation Partnership. Is this about supporting innovation or thinking about how regulation needs to adapt to a changing technological world?
Yeah, I think it's both, actually. So when we obviously are supporting innovation in our own countries, and each of us is doing that, not just the US and the UK, but we also look at the regulatory impediments to that. And I think there are a lot of lessons to be learned in both countries as we move from a regulatory arrangement that has not really grasped the gains to be had from financial innovation to one that is accommodating to them. So we, for example, have put together a report earlier in the administration addressing some of the regulatory impediments to financial innovation and committing ourselves to financial innovation done in a responsible way, and to ensuring that the various regulatory impediments and frameworks that we have imposed don't get in the way of financial innovation so long as it's done responsibly. And I think that that interaction between us and that interplay between us and the UK, because we do have a shared commitment to financial innovation and a shared commitment to robust financial services sectors, is a lot of what we're working on in the Financial Innovation Partnership.
Yeah, yeah, very much an emerging area here in the U.S. And across the industry. I mean, sort of figuring out the different parts of it and where it fits and where it'll grow. Another question is, it says, interesting, would be good to know what the current data transfer framework for transatlantic companies will be post UK-EU transition. Does Privacy Shield still apply? So I guess that maybe is for UK companies with the US, or if I understand correctly.
Yeah, and I think I think there's an evolving landscape on that after the recent court decisions in the EU, and it's not entirely clear to me what exactly that framework will be for the US-UK. I think that's something, and candidly, it's outside Treasury's bailiwick on the data protection side. So my friends at the Commerce Department work with our counterparts on that. But it is, look, this is a hard question, because if you look at the data regulation in the EU, I think it's fair to say, and a lot of commentators have said, that the EU holds the US to standards that would be aspirational for EU countries to admit, and they don't even bother to hold the Chinese and others to them. So I think there's a lot of work to be done in this space to make that work. And where the US-UK relationship goes there, I think is a subject of continued dialogue.
Yeah, there's a question here that could the US and UK set a global standard in regulating sustainability and green finance? What are the biggest opportunities in that space? And I guess that may be also, the Chancellor just gave a speech earlier last week, I guess, on this issue. But
yeah, so what I would say with regard to the when it comes to sustainability and climate with regard to the financial sector, is that there's obviously a huge amount of evolution in this space right now in private behaviors with regard to the climate issues and in the financial industry, and how we look at, for example, disclosures relating to climate and other other regulatory practices in the financial space. But I think it's fair to say, and I think you see this coming out of the Financial Stability Board, that right now, it's not clear to me that regulators around the world have a robust understanding of what is happening in the private sector with regard to the financial consequences of climate change. And there's a real lack of, I think, data on the financial consequences of climate. And so what we've been wanting to ensure in our interactions in the Financial Stability Board and elsewhere is that whatever we do in this space, we do it in the presence of robust data regarding not just the climate issue, but how it has effects in the financial sector. And collecting that data, ensuring we're operating off a robust understanding of the potential consequences, I think has been a project that the FSB has undertaken. And if you look at, for example, the Fed's recent comments on that, Governor Brainerd, for example, has talked about ensuring that we have an understanding of what the consequences might be, so that we're operating off a robust and meaningful data set and not in the absence of information, which is never a good framework for regulation.
I'm going to combine these last two questions because I want to give you a couple of minutes at the end, just any closing remarks. But one is, well, they're both near and dear to SIFMA, and one is, and our colleagues in Europe, and any possibility to bring the relevant stakeholders together and co-create a digital identity framework, especially with the digital acceleration caused by COVID. And I note in the US, we're very much engaged in things like moving forward on e-delivery and dematerialization of securities, the securities processing. And then the second question, not quite related, but to what we've been talking about, is an FTA necessary to achieve the financial services regulatory co-cooperation that both the US and UK regulators seem to want to see? So two kind of different questions, but relevant.
Yeah, on digital identity, I'm gonna have to defer to others who've been spending more time on that. It's not something we at Treasury have been focused on, but look, I think we recognize the importance of that topic, and it's something we had advocated for in our prior reports. But in terms of where we are in the progress for that, I have to defer to others. On the second question regarding regulatory collaboration, not only do I think an FTA is not necessary, I think in some ways regulatory cooperation doesn't fit within an FTA. An FTA should be about, in our view, should be about things like market access. Regulatory collaboration often needs to be more dynamic than an FTA permits. And so we like to keep those collaborations between financial authorities and financial regulators to ensure that there is a dynamism in the interaction to ensure that regulatory cooperation. So the answer to that's a long answer to the question of is an FTA necessary? I don't think it is, and I think a lot of that can be done through mechanisms like the ones we've established, and it doesn't require a portion of the FTA to be devoted to it.
Right. A minute or so left to let you have the closing word.
Well, thanks. This has been a great conversation, and I really appreciate the opportunity to do this. Everybody talks about the special relationship between the US and the UK, but I have to say that relationship is very real. It's based on shared foundational values and things like trade and investment, defense, foreign policy, regulation. The US-UK collaboration is vital to global prosperity. We've seen that firsthand as the US had the G7 presidency this year, and so we've seen firsthand how important it was for us to be aligned with our friends in the UK. The UK will have that presidency in the coming year, so we expect to work hand to hand with them going forward. There really are no relations closer than the ones we have with Her Majesty's Treasury, the Bank of England, the FCA, the PRA. As I said, I see my UK counterparts more than I see many of my interagency counterparts. So very happy to be part of this forum, and I think it's a valuable effort to ensure continued close collaboration between the US and the UK.
Great. Brent, thank you very much for taking the time to be with us today. And Duncan, I'll turn it back over to you.
Thank you.